to another episode of the SWYP 7-Minute Supersonic Podcast. I'm here again with another episode with Garrett Gunderson from the Wealth Factory. We had so much to talk about. We rolled it into episode 2. Let's just pick up where we left off. So what are some of those things that these small business owners, dentists, entrepreneurs, that, you know, they're fighting the DSO wave and trying to stay in business and create wealth so they can retire at a reasonable age? What are some of these simple tactics that they can employ? It's a system, it's a formula. What is it?
We got to think, first of all, we've been sold this bill of goods on accumulating. So accumulation is where people think, if I save, sacrifice, delay, defer, put money into retirement plans, then 30 years from now, hopefully I'll be okay. The reality is, because of volatility in the market, inflation, not putting enough money in, and then all of a sudden losing time value of money. Like, we can go through a myriad of issues that it's just a moving target for people. Like in the 1980s, if we asked people what a good amount to have in retirement was, people that said $1 million seemed like a huge number, and that they seemed crazy. Now that seems crazy as a small number. There's no way to retire off of that. So instead of that, let's focus more on finding economic independence within 10 years instead of 30 years. And the way that you do that is 5 pieces of the formula. The first one is recover cash, which is all about efficiency and plugging the leaks, with 4 main areas: taxes, interest, by renegotiating interest rates, restructuring loans, paying off inefficient loans. The third one is investments, which is find the hidden fees and commissions, because a 1% fee, 1% on $100,000 over 30 years, if you're earning 10% and instead only earn 9% because of 1% fee, instead of being 1.74 million, becomes 1.4 million. So 1% has an exponential difference. So we have to find those, because it has a huge drag on everything. Then the fourth thing is insurance. There's a lot of duplicate coverages or unnecessary exposure, and we address those. So those 4 things is the first piece. That's recover cash, put it in your pocket, boost your bottom line. The second thing is to engineer wealth, which means identify your economic independence number. How much money does it require for you to live on a monthly basis? That's the number. Then let's reverse engineer in 3 ways. Number 1, how do we build the foundation where everything's working cohesively and together, so nothing's slipping through the cracks and you don't have wealth confiscated every time there's an incident? The second thing is sustainability or safety. That could be everything from setting up asset protection trusts to corporate structures to excess liability or umbrella policies, like the things that are going to shield your money, that when you become successful, people can't confiscate that because they feel wronged, even if they're not. The third thing then, once you've engineered your wealth and identified the economic independence number, is to accelerate investment income. Find all non-cash flowing assets and turn on the cash flow so you can create the economic independence. So it moves from an accumulation mindset to a cash flow mindset, because if you can have your assets covering all of your basic life expenses, that means every active dollar you earn in your practice could now be reinvested. That's a 10 times advantage. Everybody else is just trying to save 10% of their income. All of a sudden, your income is covered by assets or even entrepreneurial income. Entrepreneurial income could be an associate or a second office or whatever that is right for the dentist. I'm not saying every dentist should have multiple offices. A lot of people, that ends up creating constraint, expense, bandwidth issues. You got to be really careful and calculated about this. But entrepreneurial income is income that comes in if you're not chair side. And then the fourth thing is to scale your business revenue. Scaling business revenue is where you find those main mechanisms or trigger points in business that give you the most exponential growth with the least amount of effort. So this can be everything from improving margins to leveraging authority, which there's a big topic there, but there's just a lot of things that a lot of people aren't teaching that help really grow a business without growing their risk. And a lot of times scaling sounds scary because it sounds like taking on a lot. I think people do it wrong. You got to let go of one thing before you grab another. And too many people just add more to the plate. That's not scaling. That's crushing yourself with far too much to do. Then the fifth thing is you got to make it count. It's treating yourself as your greatest asset, not a stock, bond, or piece of real estate. So you relax, rejuvenate, you focus on vision because it's the most rare commodity and it's the container that the entire business works in. So when you have a compelling, clear vision, everything starts to work around that. So now you've recovered cash, you've engineered your wealth, you've accelerated investment income and turned cash flow on, you've scaled the business revenue, investing back into the business with the money that's found, and then you take care of yourself so that you have the right wherewithal and thought processes, and you're doing things most businesses don't do, which is think. Most businesses are too active and busy doing, and therefore they're winning the wrong game. a limited game, and therefore they kind of get to a tough spot. So the basic things you do is you pay yourself first and save a percentage off the top. A lot of that comes from the efficiencies that we find. You build up plenty of liquidity so you have staying power. You transfer risk with asset protection, and then you invest only in things you know, which might be within dentistry, instead of diversifying into areas that you don't understand that put your money at risk, that might even destroy your mindset if those things don't work out. So that's quite a bit of information in a small period of time. But as we dive deep into each one of those things, there's more money in your life without more effort. It's just being in the know and understanding how it works.
Yeah, I feel like I just got a 2-day seminar in 3 minutes right there, which is which is awesome. I have to play it on slow-mo and go, all right, what can I learn from this? So some of the things that you mentioned, like the taxes, the insurance, the investment, those are things most business owners hire a different person for. So is that part of the problem? Is that I've got a tax guy, he handles the taxes. I've got an insurance person who handles that. I've got an investment. Not that it's a problem, because those people can all be, know their own business, but they don't know how they all fit together, and unless you've got a team that meets monthly or whatever.
Yeah, I wrote a book called What Would the Rockefellers Do? And one of the things the Rockefellers do that most people don't is their entire financial team communicates with one another. They actually work just for the Rockefeller family. It's called the family office. But that way the accountants and attorneys and investment advisors and cash flow specialists and bankers, they're all in the same room looking at the same sheet of paper, looking at this cohesively. When you have different advisors that don't communicate, you have breakage. Or even if you have advisors, like look in business, how many dentists as they grow, they hire too quickly, they hire the wrong people, it becomes a problem. A lot of the same things happen in their financial life. We're busy, where do we have time to hire? It's not an exciting thing to go through the hiring process. So all of a sudden, you might have an accountant, but are they a tax strategist? And is the CPA enough, or do you need a tax attorney? Or if you own your building, you might need an engineer that gets involved, so you have cost segregation. Or you might need a controller or a CFO. There might be a team approach. And the other thing is, a lot of times we're asking for things that might not be helpful. Like, hey, I just want to pay less tax this year. Well, paying less tax this year might create two problems. Number one, you buy something you wouldn't have otherwise bought, and that's called letting the tax tail wag the dog. So I spent $1. Yes, I saved 37 cents, but at the same time, it just cost me 60 cents I would have kept in my pocket buying something I didn't want. Or the second thing is, deferring taxes doesn't mean that we've saved them. It means we've delayed something. And what if you're in a higher tax bracket in the future because either A, you have less write-offs, or B, the taxes go up because we have a $20 trillion deficit right now, or debt, sorry, not deficit, a debt that's going on in the US alone. And what if you're going to have more money in the future? Hopefully you do, just because of inflation. So we have these tax traps that lure us into the wrong decisions. The three things to do instead is you build that tax team, you meet with them every quarter, and you brainstorm and create real tax strategy cohesively. Then the second thing is you ask every time you write a check or spend money, how does this relate to my business? And document it so you can turn expenses into tax deductions. There's something called the Augusta rule that I find most dentists miss, and that's 14 days of tax deductions on their primary residence. I find that they don't pay their kids when they could a lot of times. That's a major tax deduction that they miss. Even having a home office gives them some utilities they can write off at the house and things like that when they're doing paperwork and things that way. We can go through hundreds of tax deductions that are legal and ethical that are missed. And then the third part of the framework is, how can they reclassify expenses? And expenses reclassify income. So if you can turn active income into passive, like you rent your building out to your practice, that's a 1099 income. That's less tax than a W-2. It can save you up to 15.3%. Or differentiating income, where you take dividends versus W-2 salary, that could save up to 15.3%. So reclassifying income, that was one way. Active to passive, another way is taxable to tax-free. There's ways when you own a business. If you've never heard of ESOPs, that could be a big thing. Right. Or caps trust. These are amazing things that are available. They just don't know they exist. Therefore, they miss out on it. We just saved someone $1.4 million selling their business with just one of these simple trusts. Or if you have major risks and you're doing a lot of business, maybe setting up your own insurance company. Let you put money in pre-tax. You get to pull it out capital gains. So that's another thing. How do you take your ordinary income and make it a capital gain income? That's very unique to business owners, and a lot of dentists miss out on that. Or, taxable to tax-free. So just building a team and being proactive, and every 3 years you can amend your returns or go back and look if you miss something. If you've built software, there's something called Section 199 that lets you take extra credits and write things off. I'm giving so much right here, but I'm just showing why we miss out on this. Because if you don't have an accountant that's actually a strategist or a tax attorney when you're doing seven figures, I have an amazing accountant, but if I don't let him communicate with a tax attorney, I miss out on tax deductions.
Right.
That's the bottom line. So it requires some intention. It requires a certain approach. And look, you don't have to replace all these people just because I'm talking about this. It may just mean that you add one or two and you find out if they're doing a good job.
Well, and I don't think you have to, explain to dentists too far that having good communication, even in their own office, how important that is. I mean, can you imagine the hygienist not talking to the front office, not talking to the assistant, not talking to the office manager?
It happens in our finances all the time.
Right. And that's what happens.
We're so focused on revenue as business owners instead of the bottom line. It ain't what you make, it's what you keep,
Right. Wow. So earlier you mentioned, let's talk about your book really quick and we'll kind of wrap on that. The book is called
What Would the Rockefellers Do?
What Would the Rockefellers Do? So, and it's about, is it about what we just covered, which is kind of gluing your whole team together and preparing for, wealth retirement?
That's one of the 13 chapters. One of the 13 is just on that. There's other things on legacy, how you build something called a family constitution and a family retreat structure so you can pass on your non-monetary assets for generations to come. There's another concept in there called cash flow banking, which is how you can start financing things yourself rather than using institutions, capture interest that would have been paid otherwise, have a baseline strategy that can't lose, even though it's not going to be your highest rate of return. It becomes a storage facility for other investments. So it goes through a few of those concepts. And so, I want to get it into people's hands on my dime. I mean, I want to invest in the dental profession. So.
Cool. Well, I mean, it's clear you don't have to listen long, and you are passionate obviously about what you do and the whole financial side of it, but also, you're committed to the industry, which is great. So we're going to offer the book for free.
They can download the book immediately, and if they want it shipped to them, they'll just cover the shipping, and I'll cover the cost of the book.
Perfect. Well, that's great. It's a great offer. Well, Garrett, that's going to wrap it up. So thanks for your time and your expertise. I feel like I've learned a ton here myself personally, and I know people listening to you too. So we appreciate your time. Thanks again.
All right. Take care.